All right, San Diego Living coming right back. But first, particularly these days, many people are confused when it comes to investment strategies. That's why for the past several weeks, we featured Steve Sexton of the Sexton Advisory Group with our weekly Money Minute, which provides our viewers with important information to help make those important financial decisions. So here's Steve with this week's Money Minute.
Thanks and hello everybody. This is Steve Sexton with this week's Financial Advisory. This week we're going to talk about fees and expenses with mutual funds. Now I'm going to tell you about one of my new clients who just came to the office last week. She brought in one of her mutual funds, and when we did the evaluation we found out that her mutual fund was in the 70th quartile out of over 2,100 funds. That means her funds number 1,450. My question to you and her was, would you rather have the 1,450th fund or the number 1, 2, or 3 fund? See, it turns out all mutual funds are ranked in their category. The other thing you want to know about mutual funds, it's all about the management. So you don't really want to take a look at the 1-year returns. You want to look at the 3 and 5, because if there's good returns in 3 and 5, you're going to have really great returns and it's going to work out for you long term. Now, other things you need to know. Most mutual fund managers don't have their money in the fund that they manage. In fact, only 7% of the over 14,500 mutual funds have their own money in the game. So you want somebody that has their own money in the game, you're going to get higher returns. Secondly, you want to look at expenses, because my client, say her share was $1 a share and she bought $100,000 of it. Now, it had a front load. That front load said, hey, you're going to take out 5.75% just for the privilege of purchasing this mutual fund. And then it had other fees like a management fee, a 12B1 expense fee, a prospective gross expense ratio. That means they had fees every single year of almost 1.3%. And then she's paying a manager on top of that. At the end of the first year, she had to make up almost 8% just to break even. And on top of that, every year after that, she's going to have to get at least 2.5% return to make that work. Now, there's A shares, B shares, C shares, D shares. It goes all the way down to I shares. Now, if you use an institutional platform, you won't be paying front loads or deferred loads. You won't be paying as high as expense fees, and you'll save a lot of money from falling through the cracks. Now, on top of that, you want to take a look at how that mutual fund's ranked in its category, because if you do those things, you're going to get high quality merchandise. And when you're retired, it's all about buying the best merchandise at the lowest fees, because that way you save the money from falling through the cracks and you get a higher return. Now, that's it for today. If you have any questions about your mutual funds, the quality of them, and the fees, you can always go to our website at www.sextonadvisorygroup.com or give us a ring at 1-800-560-2611. Now remember, smart financial decisions do impact the quality of your life.